Australia's booming property sector. Fastest growth in 17 years. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from news.com.au. So, Australian property values climb at the fastest rate in 17 years as Sydney and Melbourne are on track to beat records. Now, this is after we've had the first recession in 28 years, when we've had trading while insolvents allowed for a big part of last year, while we had job seeker bonus supporting people, while we had massive amounts of JobKeeper. Nearly 9% of those employed in Victoria were supported by JobKeeper. We've got the government piling on debt upon debt. We've got the cash rate at the lowest it's ever been. Virtually zero. And unemployment is at, well, underemployment and unemployment, from Roy Morgan at least, is over 20%. And our property is growing the fastest at in 17 years. Do you think there might just be a little bit of overheating occurring? Do you think there just might be? Now, what we're seeing here, guys, I think is the candle-on effect. The effect refers to the change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point, therefore a specific flow path through the economy. Now, with more people able to borrow, lending laws have been, the rules to lending criteria have been eased as well. We shouldn't forget that. And the superannuation that people withdrew, we shouldn't forget that too. And the low interest rates. So that means more people are borrowing to get into housing. So that's creating, due to this effect, an increase or a bubble in that price, because the money supply here in Australia, a big chunk of it seems to be flowing through housing into the economy. The government does everything it can to stimulate housing. That's why we have this bubble, everyone. That's why housing is so expensive relative to incomes. We're having a two-speed economy, guys. We're having people that can afford to sustain a $900,000 house or $800,000, $700,000 home loan, and those that can't. You've got people that are on the median income of $51,000 a year, and those that are earning $2,000 a year. And you'd think with the size of our nation and the amount of land that we have, there wouldn't be such a disparity in it. Maybe it's because people just want to live in the cities. But we see the regions are going up as well. So let's have a look at this. Is this going to be, well, is housing just going to keep going up, or is it going to just inflate again and again and again? We looked at a property yesterday. Over $900,000 for a two-bedroom place on a 400 square meter block in Brisbane. Sure, it's close to the city, very close. Probably, you could probably walk to the train station and would be comfortable, reasonably, except on a hot day. But a 400 square meter block, guys, what you can build up, maybe? Get some other rooms underneath? What happened to quarter acre, hey? So, let's have a look at this article written by Alexis Carey. Australia's already eye-watering property prices have skyrocketed yet again, with new data revealing values are rising at the highest level since 2003. Now, one thing I'm not sure she's going to mention here, but Tarek Brooker has been sharing on Twitter, with just regards to the number of properties that are on the market. We're about 100,000 below where it should be. Similar to the number of insolvencies or personal insolvencies are about half of where they should be. Oh, I forgot to mention, remember the mortgage holidays? Those mortgage holidays, they roll out every recession. They had those in the 80s, didn't they? Of course they did, or the 90s. Who would have thought? I think Martin North was saying that we'll have unnatural interventions. Well, everything is unnatural, really, when the government tries to manipulate the market for political purposes. According to the latest CoreLogic data, values surged 2.1% higher in February, the largest month-on-month change in 17 years. Experts say the jump has been caused by a mix of factors, including record low mortgage rates, improving economic conditions, government incentives, and low supply levels. So it's all these things combined. Sydney and Melbourne were among the strongest performing markets, recording a 2.5 and 2.2% lift in home values over the month respectively. Some smaller cities were big winners, with Darwin housing values rising 5.5% over the past 3 months, Hobart 4.8 and Perth 4.2. I remember when I went to, not to Hobart, to Lonnie, and the draftees that were working for the Launceston office, I was quite jealous that they could afford to buy a house so cheap down there. Sadly, it looks like it's, well, getting crazy down there as well. I was talking to a client yesterday. She was dropping off the scanner. Her and her husband have moved to get a little bit more space. I think they got acreage now. Good on them. And they were saying some of their friends had moved up from Sydney and going, it's not that much more affordable here anymore. It's going crazy. I mean, it's been a few years since I've bought, since we got into the market. And, I mean, it's nuts, guys. It is just crazy. But while the trend was seen in every capital city, it was also apparent across state and regions. And this is houses, guys, not apartments. CoreLogic's research director Tim Lawless said a synchronized growth phase like this hasn't been seen in Australia for more than a decade. The last time we saw a sustained period when every capital city in the rest of state regions was rising in value was mid-2009 through to early 2010 as a result of post-GFC stimulus fueled by demand, he said. So the same thing that's happened here, juicing up the market, everyone. Whether this newfound growth in Sydney and Melbourne can be sustained is unclear. Both cities are still recording values below their earlier peaks. However, at this current rate of appreciation, it won't be long before Australia's two most expensive capital city markets are moving through new record highs. With household incomes expected to remain subdued and stimulus winding down, it is likely affordability will once again become a challenge in these cities. At the moment, Sydney's median property values, including both units and houses, is a staggering $895,000. Melbourne is hot on its heels at $717, followed by Canberra at $706. But Mr. Lawless predicted Sydney and Melbourne prices could surpass the record highs set in 2017 within weeks. At the moment, if you look at the growth rates at face value, the annualized trend looks to be getting up to around 16% mark nationally. 16% at an annualized level. That's over a year. I mean, this is showing you. This is evidence that the purchasing power of our money is being eroded in this sector, even more so. It's a huge bubble. But can you blame people? QE's been doubled now by the RBA recently. They're pretty much going to do what they need to keep interest rates low. So that's just going to reduce the purchasing power of your money. Imports and materials are getting more expensive. Shipping is getting more expensive. Food is getting more expensive. Maybe people want to lock their money into at least an asset that is, well, known to appreciate here in Australia. And the government seems to intervene in the market whenever there is any risk of a correction. So he doesn't think it'll rise that much. I think the rate will slow down, at least in the second part of the year, simply because of affordability constraints weighing on the market, preventing some people from purchasing. In other words, values are unlikely to keep climbing at the same huge rate in our least affordable cities, as it would simply end with people walking away from the market altogether. However, Mr. Lawless said Sydney and Melbourne still had a way to go before that happened. Sydney prices are still a bit lower than they were back in 2017. They're around 1.1% below the previous peak in July 2017, he said. At this rate, it will only be a month or two before we see those markets pressing to new record highs. So do people get the dip? Or is this a dead cat bounce? That's the question. And will we be able to tell? I mean, this is March now. So job seeker is going to come to an end. The job seeker bonus. Job keeper is coming to an end. Mortgage holidays, there's still a little bit of time, but they're coming to an end. He said realistically, prices were likely to end around 10% higher nationally during this calendar year, although smaller markets like Perth, Darwin and Brisbane were likely to perform more strongly. That's because those cities don't face the same affordability problem, are less susceptible to migration flux, and are more appealing to investors. Mr. Lawless said while industry insiders were previously predicting dramatic house price falls around a year ago as the pandemic and recession unfolded, the signs had been clear that the boom was coming for some time now. What do you mean? It's government intervention. Was it clear that they would cut the interest cash rate to 0.1% when sometime they were saying publicly that 3% was at emergency levels? Maybe they'll go negative, guys. Remember, all this money that is created means you just have to work harder for it. Means that your work is worth less. Means your work is less appreciated because it's a hidden tax, guys. Inflation is a hidden tax. Most people don't get it, you know. And the politicians are never going to get rid of it because it allows them to promise the world and tax you on the sly. It's a brilliant invention, this fiat system. So we're seeing economic improvements well beyond what was forecast in terms of the speed of economic recovery. So there will be a gradual change in expectations, he said. But we haven't seen the government stepping away yet from propping up the economy. The economy is on life support. If the government can step away and remove this support and the economy still keeps going, that will be the real test. What's more surprising is how pessimistic we were in March and April about how well we would navigate the storm as a country and economy. Mr. Lawless said current stimulus measures such as home builder and stamp duty concessions had sparked a surge in first home buyer activity, but said raising a deposit and covering the transaction costs of buying were the biggest challenges for younger Australians entering the market. Meanwhile, the January 2021 lending to households and business figures released today by the ABS revealed the value of new loan commitments for housing grew for the 8th month in a row and hit another record high, according to the REIA. The seasonally adjusted value of new loan commitments for owner-occupier housing rose 10.5% in January and 44.3% for the 12 months, with rises being seen in all states and territories except the Northern Territory, the president said. The value of new loan commitments to owner-occupiers rose 10.9%, the largest monthly increase since August 2020. Loans to investors also increased for the 8th consecutive month, with the value of loan commitments for investor housing increasing by 9.4%. Yeah, but I mean, the issue is most of it's all going to first home buyers, guys. First home buyers are the ones that are just piling in. And you can't blame them. I mean, we're in a rental now. And, you know, the stairs broken, windows need to get repaired, the downpipe doesn't even attach to the gutter. Now, I'm not too fazed by that because, well, I've got to redo my gutters here. I've got a gutter that doesn't even exist. I've got to pull off and replace. So, you know, I'm not too precious. But I'm not living there permanently. If you were, you'd be expecting at least those things to be sorted. So I'm not surprised people want to get into a house. The number of owner-occupier first home buyer loan commitments increased by 9.6% for the month to 70.8%. This is the highest level since May 2009, when the Commonwealth Government's response to the GFC included temporarily increasing the first homeowner grant. There you go. That's it. There's a precedent now, both sides of government stimulating the housing sector. It's what they do, everyone. It's all about housing here in Australia. Now, the long-term issues with that are it leads to a decline in the economic complexity of our country because, and I know, you know what, we're going to mix it up. We're going to go to a different economic complexity chart, a different measure today. We won't go to the Observatory of Economic Complexity. We'll mix it up and go to the Harvard Atlas, guys. We'll posh it up, haughty-taughty, and I'll have a coffee while it loads. So they rank us 87th in the world from the ECI ranking. Now, the issue with that is, if you don't have a complex economy, your manufacturing, production, and what you're exporting are more primitive. So it's easier for other countries to compete, and you can't charge as much, and the demand for high-tech jobs just aren't here. So there you go. Why would you invest in anything when you can just put it in housing? Let me know your thoughts, opinions, and comments down below. Thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys. I'll see you next time. Bye for now.